Are you wondering what the recent craziness in the stock market is doing to affect the greater Columbus real estate market? Well, stick around, we'll talk about that next. Hey RT family, Ryan Reynolds here with Keller Williams Consultants Realty with your April 2025 Greater Columbus Real Estate Market Update. So what's going on in our Greater Columbus real estate market here as of April 2025? Well, the recent craziness that's been going on is that the stock market has been going up and down, all based on mostly tariffs, it seems like, that are being announced from the federal government. Now, whether you agree with the tariffs or not, we're not going to get into that. We're really going to more go into what it's doing to affect our market. And the first thing I will tell you is the real estate market is not like the stock market. There's not a readout on how much your house is worth today versus what it was worth yesterday. It's a lot slower to respond, and so from an investing standpoint, I actually prefer to invest in real estate because it seems to be a lot more stable than the stock market, but that's not what we're here to talk about. What we are here to talk about are the three things that are driving the market here, which are the inventory levels of single-family homes, the mortgage interest rates on the 30-year fixed mortgage, and of course, how much house values are. Is your house worth more today than it was last year, or is it worth less? We're going to get into that next. So as always, we're going to start with the inventory levels, and to give you the stats, the current levels of inventory are 2,836 single-family homes on the market that are listed as active, and last year we had 1,991 homes. That represents about a 29.8% increase, and that is great news, especially for real estate agents and buyers, and even for sellers, because most sellers are going to be buying something else. Now, when we look at the actual statistics of the months of inventory based on closed sales, we are riding right at a 1.5 months inventory. And what that means from a technical perspective is that we are in a seller's market, where a seller's market is between 3 months and really 0 months, and a balanced market would be between 4 months and 6 months, and a buyer's market would be above 6 months. So as you can see, we're well into the seller's market, and we can go into a long litany of why we got here, but essentially we just haven't been building enough homes for the last really 12 to 15 years. But either way, we're here, we've got a low amount of inventory, but it is rising, and that is good news for our market because that'll enable a lot more people to actually move. So the next thing we're going to talk about are mortgage interest rates, because this is probably the biggest driver for most people on whether they buy now or whether they're going to wait. So let's just go ahead and go straight to the numbers. Today, the mortgage interest rate is right at 6.92, and depending on when this video comes out, it could be drastically different. Mortgage interest rates have been bouncing around in the last week from a low of around 6.6 to up now 6.92, and I think it actually was even higher, maybe touched 7 the last couple days. That is based on the bond market, and the bond market is counterintuitive to the stock market. And so with the volatility in the stock market, we've got volatility in the mortgage interest rate market. What does that mean? Well, the good news is that a year ago it was at 7.34, and now at 6.92. So overall long-term trend is down. It is a slow, bumpy trend. We kind of expect that to continue, especially until these tariffs are worked out with these other countries. At that point, we expect it to continue on down. Personally, I think that mortgage interest rates by the end of the year will be around 6.25, maybe 6.5. Fairly stable, but in a generally downward trending direction. Hopefully that gives a lot of people hope that they can go ahead and move forward and sell their homes. And I think that's actually happening as evidenced by our rising inventory levels. So that's mortgage interest rates trending down, not as far down as I would like to see them, and but hopefully they'll continue to trend down for the rest of the year. So the last thing we're going to talk about are home values. Is your house worth more today, or was it worth more a year ago? And the quick answer to that is it's worth more today. The actual number is that on the median, it's up 3.1%, but yet on the average, it's actually up 4.4%. So either way you look at it, we're up somewhere between 3 and 5%, which is almost completely normal for real estate. Over the course of the past 70 years, real estate on average has appreciated at a rate of about 4.1%. Although we have had some ups and downs, we're right on track with that. So from the stability of an investment standpoint, investing in a house is a good, stable investment from my perspective, at least. I'm not giving you financial advice, by the way, or legal advice, or any of those kind of advices that I can't give because I'm not licensed. However, I believe that investing in real estate is one of the best things you can do, and investing in your home is actually even the best thing you can do because you can lock in your cost of housing over time. And statistically, people who have a house that they own are way more wealthy than people who rent. So Last thought would be tying this all together. What's going to happen the next month? Well, I don't have a crystal ball. However, I think what's going to happen is a lot of this tariff stuff is going to calm down. President Trump announced a 90-day stay of this tariff stuff going into place. And I think in this next 90 days, he's going to work out a lot of stuff with a lot of countries, maybe not with China, but with a lot of other countries. That will produce a bigger amount of stability. And I think we'll continue to see mortgage rates then start to go down because the fears of inflation will probably be somewhat let off. I do expect to see a lot of homes coming on the market in the month of April and in early May. This is one of our most busy times of the year for homes to be listed, and I'm expecting that then to drive the economy and to probably improve the stock market in the long run. So those are my thoughts. I hope you have a great month. If you have questions about your specific situation, feel free to reach out. My name is Ryan Reynolds. I'm a real estate agent with Keller Williams Consultants Realty. And as always, it's the Ryan Reynolds team, unlimited opportunities and exceptional experiences.